Is the UK headed for a crisis? If you've seen the news headlines today, you've seen UK gilt rates rising, you've seen gold at all-time high, and you've seen the pound absolutely battered. But what does this mean for the UK? What does it mean for the outlook? And how bad can this get? So what is a gilt? So a gilt is a type of UK bond. It's a financial instrument which is issued by the British government to raise money, typically for a set period, and pays interest to the holder. They're generally considered very safe and are backed by the UK government, and investors buy these to receive the regular interest payments and receive the principal at maturity. Gilts come in different lengths. You have what's called the long gilts and the short gilts. Short gilts tend to be shorter time frames. Short gilts tend to be shorter time frames. Think 6 months, 2 years, 5 years. On the other side, you have what's called the long end. These can go from 10, 20, all the way up to 30-year gilts. The interest rates on gilts tends to go up as you get to the longer ends of the bonds. This is what is called the yield curve. There is a phenomenon called inverted yield curve. Inverse yield curve is when the short end of the gilts pays a higher interest than the long end of the gilt market. If you look at the chart here, we can see the surge that gilt yields have had since the COVID crash. If we look at how we have this on a chart, so after the 2008 crisis and you saw interest rates absolutely slashed, you see this trend that we've seen downwards. All the way down into COVID here, and then following COVID, where we had large scale inflation, you can see it soared up into the region we have now. This here is where we had the famous Liz Truss moment, so that was when we saw gilt yields absolutely soar up. This is where they peaked at. If we now look, we are higher not only than when we were under Liz Truss, but if you go back, we are now at levels that we were at in 2008. This is unprecedented, and the UK is carrying far more debt these days than they were back then. This change is even more pronounced when we look at the long end. So as you can see, same pattern. We've got the Liz Truss rally here, we've got COVID down here, we've got this run up, and if you look at where we are at now at 5.693%, we are now at levels not seen since 30 years. 30 years, all the way back here. And what makes this particularly worrying is you can see we have this massive gap here. And in all honesty, I don't see a lot that stops this rising. And as this continues to rise, this means UK debt gets more and more and more expensive, which means the government's deficit gets bigger and bigger, and it means that the government then has to borrow more to pay the debt. And this is what Ray Dalio refers to as a debt spiral. So what else has this affected? So as we can see here, this is a chart called the BXY. This is the index of the pound. So this shows the strength of the pound against different currencies, against a basket of currencies. As we can see, gradually since 2007, the pound has got weaker and weaker and weaker and weaker, and we've began to plateau out. But what about on the lower time frames? What can we see? We can see today we have had this big drop down to here. We're still holding up okay, but you can see that it's beginning to fall off, and we could be entering a bit of a downtrend when it comes to the pound. And this is interesting because a weaker pound makes imports more expensive, and the UK relies heavily on imports, particularly against the dollar, as dollars tend to be used for a lot of global energy trade, so oil is priced in dollars. As we can see, the pound this year, since Donald Trump has been in, well, in fact, the dollar has fallen so dramatically against everything else. But if we look in today, if we're looking at what's happened today, we can see big drop off today. Whether we recover and begin to gain this level again remains to be seen, but we could be heading to retest this level here, and if not, we could see a pound fall down here. And this is a very interesting chart. So this is the gold chart. So as we can see, gold is what people tend to run to in a flight of safety. If we look at the gold chart on the weekly, this is just been relentlessly moved up as we've seen the inflationary spike. You can see here, following the back end of COVID, we have just seen a relentless spike in gold. And if we look in over the last week, when it's really come to bear, we have seen a really big push up in the last week. And I don't think this stops here. I think we continue moving up on gold, and this is just a sign of how troubled economies may be in the near future. So what about the data? This chart here shows the inflation rate of the United Kingdom. As you can see, we had this massive inflation spike on the back of COVID. A lot of work done to bring this down into this 2% area. So 2% is a key number, as this is the target that the central banks have to keep inflation at. And you have a 2% with a 1% plus minus as a target. If it goes above that, the Bank of England have to write a letter explaining why inflation is above that. If we look at where inflation is now, we see this is at 3.8%, which doesn't bode well considering that interest rates are as high as they are. Typically interest rates are used to help curb inflation. Higher interest rates are what brought this down to here. The bank has been cutting interest rates over the last few years, and we're currently at 4%. However, this poses a real issue in terms of, will we see further cuts come in? I think if we look at how employment is stacking up, it's not good. The macro environment is very, very tough. We look at interest rates here. You can see interest rates here, 4%. So starting to come down from that COVID era. And then if we look at unemployment, so this is what the central bank aims to balance. We can see unemployment is now creeping up and up and up, and is approaching this spike that we saw on the back of COVID. We're about 0.5% off that area, so that's also quite worrying. We can see that trend moving all the way back up. What else can we see? Here we have a figure called government debt to GDP ratio. So this is the level of debt against a country's GDP. You can see this is from this post-war period. It came down and down and down and down, all the way down here. We saw a little bit of a move up, and then from 2008, when we saw governments take on a lot of debt to fuel stimulus, we go up. We've got this little bump here, and then this is relentless up. And as we can see now, government debt to GDP now sits at 96%. So the government is carrying nearly as much debt as economic value the country produces every single year. That is a dangerously high number. And if we look at GDP for the UK, you can see moving up, up, up. So GDP continues to grow. However, a large portion of this is due to what is called M2. M2 is the supply of money inside an economy. As we can see, this is just been going up and up and up and up and up and up and up as governments print money, which makes your pound or your dollar less valuable, which is why we see things like houses, gold, stocks, all of that stuff go up and up and up and up because your money currency, the fiat currency, gets less and less valuable as more money enters the system. So ultimately it could be a very interesting next couple of months ahead. There's some very big policy decisions to be made in the UK. We've got Rachel Reeves as Chancellor coming up with a budget in October. That'll be interesting. A lot of people expect her to put up taxes, which feels like she may have to do to plug some of the gap, seeing as though she isn't getting the growth that she was hoping to get. And this really weighs a headache for Rachel Reeves, because if the government has a budget where the deficit is getting bigger and investors get less and less confident about the UK being able to grow and being able to reduce that deficit, these yields will go up and up and up, and ultimately it will just continue and fuel the spiral that we see. So how does this affect you? So ultimately these interest rates and these inflation expectations will play into mortgage rates. As we know, mortgage rates have put a real strain on a lot of people. It's not good. Ultimately, if inflation stays high, if we see gilts stay high, and if we see interest rate cutting slow down, that stands for mortgage rates to continue going up and up and up. And ultimately this can have a real tangible impact on the spending of people in an economy. You have an interesting element called the wealth effect. So as people feel richer and their houses go up in value, they tend to spend more. On the flip side of that, on the flip side of the wealth effect, you then see if people's house prices start falling, they feel less wealthy, they spend less, GDP goes down, spending goes down, government tax receipts go down, deficit grows, and Rachel Reeves' headroom gets smaller and smaller, and ultimately this just fuels the debt spiral. So yeah, it'd be really interesting to watch this play out. I think certainly there's a level of scrutiny on Western governments like never before, and there's a real push now to try and curb some of the spending that you've seen from these governments. A lot of it is unfunded spending, and ultimately the chickens are coming home to roost. Ultimately this may bring to the end of the fiat currency and potentially more of a rotation into Bitcoin. So this essentially could continue rising as fiat currencies like the US dollar and the British pound get more and more worthless. And if we look, we can see Bitcoin up 2.59% against the British pound, compared to only 1.42% of the dollar, which really does highlight just how weak the pound is getting. Yeah, it's very worrying. it'll be interesting to see how Rachel Reeves tackles it. There's a lot of pressure on her to announce some government cuts. I think the government is way too bloated and the spending is way too high, but the real question is then how and what do you cut? So it'll be really interesting to play out. Do we see a collapse post-October? Potentially. I think the October budget is really, really important now, and I don't envy Rachel Reeves for the job she has to do. But thank you all for watching. If you enjoyed this macro stuff, please give a like, please subscribe, and drop a comment. It really helps out. And yeah, let me know if you'd like me to cover more macro stuff and talk more about what's happening in this realm, and also sort of what the tangible impacts are to the everyday person. So yeah, thank you. Have a lovely evening, and I'll see you all later.